Everyone's getting ready for the next financial crisis, but they might be looking in the wrong direction. Most people are expecting a repeat of 2008, a deflationary implosion where asset prices crater, jobs vanish, and cash becomes king. But what if the next meltdown isn't a crash? What if it's an inflationary explosion that silently, relentlessly, and completely wipes out your savings, even while asset prices on paper don't seem to fall? What if the very definition of a safe haven is broken? Today, we're going to tackle the most pressing financial question of our time. In a world of unprecedented debt and radical new monetary tech, is Bitcoin the ultimate lifeboat you need? Or is it the very thing that will sink right along with the ship? The answer isn't what you think, and by the end of this, you'll understand why new regulations and groundbreaking technology are changing the rules of the game forever. To figure out where we're going, you have to understand one thing. The next crisis won't be a sequel to 2008. It's a totally different beast, driven by forces that have never existed together in modern history. The real problem isn't just the debt, though that's a terrifying part of it. The core issue is the death of sound money and the birth of a new, highly controlled financial world. Let's talk about the debt. The numbers are so large, they just become an abstraction. The US national debt, for example, is so colossal that if you counted it out $1 per second, it would take you over a million years. This isn't just a big number, it's a structural trap. A system with this much debt can't handle high interest rates. It can't afford the interest payments. And it definitely can't handle a deflationary collapse where asset values fall, because that would destroy the tax receipts needed to service the ever growing mountain of IOUs. So, what's the only way out? For a system this indebted, the only path forward is to devalue the currency itself. They can't afford for markets to crash in nominal terms, so they have to make the money you use to buy things worth less. This is the inflationary scenario. But this isn't the inflation of the 1970s. We're entering an era of what you could call managed inflation, pushed by two major forces: deglobalization and the rise of central bank digital currencies, or CBDCs. For the last 40 years, the world ran on globalization. Goods were made in the cheapest places, which kept prices low for everyone in the developed world. That era is over. Geopolitical tensions are forcing countries to bring manufacturing back home, and this reshoring is naturally inflationary. It's just more expensive to make things in North America or Europe than in Southeast Asia. This creates a constant upward pressure on prices that central banks can't easily fix. Now, layer on top of that the most transformative and potentially dangerous financial technology ever made, CBDCs. Central banks all over the world, from China to Europe to the US, are in advanced stages of developing digital versions of their currencies. A 2024 survey by the Bank for International Settlements showed that a huge majority of central banks are exploring CBDCs. Unlike Bitcoin, which is decentralized, a CBDC is the ultimate tool of centralization. Think about what that means. A government could drop stimulus directly into your account, but it could also put an expiration date on it to force you to spend. It could apply negative interest rates directly to your savings, making it impossible to hoard cash. It could even be programmed to restrict what you're allowed to buy. This isn't some far off sci fi plot. These are features being openly discussed by policymakers. In a world like that, saving money in a bank account becomes a guaranteed loss of purchasing power. Your money is no longer a stable store of value. It's a melting ice cube. The game is rigged. The system is cornered. It can't allow a deflationary crash and is building new tools to enforce a policy of permanent inflation. This is the crisis we're facing. Not a loud, sudden crash, but a slow, silent, and inescapable erosion of your wealth. So, this brings us to the central question. In this new world of programmatic inflation and financial control, where do you go? Where's the safe harbor? Is Bitcoin the answer? Is it the ultimate safe haven, a digital lifeboat in a sea of monetary chaos? Or is it just a speculative bubble that'll pop at the first sign of real trouble? Before we can answer that, we have to look at the old guards, the traditional safe havens, and see why they might fail this time around. First, there's gold. For centuries, gold has been the undisputed king of safe havens. It's tangible, it's limited, and it has no counterparty risk. Central banks themselves hold it, but gold has its own issues in the modern world. Its price can be swayed by paper markets like futures and ETFs. It's a pain to move across borders in large amounts, and you can't exactly use it to buy a cup of coffee. During periods of market turmoil, gold often performs well, acting as a refuge in the initial panic, but its upside is often seen as more limited compared to its digital cousin. It's a reliable anchor, but it might not be the high-performance engine you need to outrun modern monetary debasement. Next, government bonds. For decades, bonds were the bedrock of any conservative portfolio, the so called risk free asset. But in a world of engineered inflation, that idea is becoming a dangerous myth. If a 10-year government bond yields 3%, but the real rate of inflation is 8%, then holding that bond is a guaranteed loss of 5% every single year. You're literally paying the government to take your money. In recent years, we've seen investors start to question just how safe assets like US Treasuries really are, with sell offs happening even during periods of market fear. The very definition of a safe haven is being turned on its head as people realize the main risk isn't default, but debasement. Finally, what about real estate? Property has long been a favorite hedge against inflation. After all, they're not making any more land, but real estate is highly illiquid, comes with huge transaction costs and taxes, and is vulnerable to property tax hikes that eat your returns. It's also tied to the local economy and can be hit by political risks like rent controls. While it can be a store of value, it just doesn't have the portability and flexibility needed for a fast-moving global crisis. This is the grim reality. The traditional lifeboats, gold, bonds, and even real estate are all starting to look a little leaky in this coming storm. This forces us to look for a new kind of asset built for a new kind of world. And that inevitably leads us to Bitcoin. This is the bull case for Bitcoin. The argument that it's not just another speculative chip, but a new kind of financial technology perfectly designed to thrive in an era of monetary crisis. This argument stands on a few core pillars. The first and most important is absolute verifiable scarcity. This can't be overstated. There will only ever be 21 million Bitcoin. That's it. It's a hard cap enforced by a global network of computers. While it's technically possible for the code to be changed with overwhelming consensus, it's considered practically impossible, making the cap a reliable feature. This is a stark contrast to every government currency on Earth, which can and will be printed into oblivion. Since early 2020, the US M2 money supply grew at an unprecedented rate, peaking at a 26.6% year-over-year increase in February 2021. While central bankers can create trillions with a few keystrokes, no one can create more Bitcoin. This is its core value proposition as a hedge against inflation. It's a protest against currency manipulation. The second pillar is decentralization and censorship resistance. Bitcoin runs on a network with no central point of failure. There's no CEO to subpoena, no headquarters to shut down, no single government that can control it. This makes it the most censorship-resistant asset in history. In a world where financial censorship is a growing concern, from freezing bank accounts to deplatforming individuals, the ability to hold and move value without permission is becoming an essential tool for financial freedom. Think of it as property rights enforced by math instead of by legal systems, which can be changed on a whim. The third pillar is the digital gold narrative. Bitcoin shares many of the properties that made gold a timeless store of value, but it upgrades them for a digital world. Like gold, it's durable and fungible. But unlike gold, Bitcoin is incredibly divisible, highly portable. You can move $1 billion across the globe in minutes, and easily verifiable on its public ledger. These properties are leading a growing number of investors and institutions to see it as a new type of safe haven asset, a parallel system to gold that's better suited for an internet-native world. Finally, there's its historical performance and growing adoption. While past performance doesn't guarantee future results, Bitcoin's track record in crises is telling. During the banking turmoil of early 2023, as US regional banks were wobbling, Bitcoin's price surged, showing its appeal as a flight to safety asset outside the traditional banking system. This resilience hasn't gone unnoticed. Recent reports from late 2024 and early 2025 estimate that global crypto ownership has grown to over 560 million people, with Bitcoin being the most widely held digital asset. This isn't just retail speculation anymore. A recent Coinbase report indicates that 60% of Fortune 500 companies are now working on blockchain initiatives. This is a story of deep structural adoption. The asset is maturing, and its behavior in crises reflects this growing role in the global financial system. Now, for every argument that Bitcoin is a lifeboat, there's a counter argument that it's a fragile, speculative time bomb. A credible analysis means taking these risks seriously. This is the bear case, and it focuses on four main concerns: volatility, correlation, regulation, and technology. The first and most glaring weakness is its jaw-dropping volatility. Let's be blunt. Any asset that can drop 20% in a day or over 70% in a year, as it has in the past, stretches the definition of a safe haven to its breaking point. This volatility makes it a poor store of value in the short term. Imagine needing your money during a crisis only to find your safe asset has lost half its value. The argument that it's a good long term store of value may be true, but a crisis is a short term event. You need stability now, not in 5 years. The second major criticism is its high correlation with risk on assets. For much of its recent history, Bitcoin has traded less like digital gold and more like a high growth tech stock. Analysis has shown a strong positive correlation between Bitcoin and indices like the NASDAQ 100. When the market is in risk on mode, stocks and Bitcoin tend to rise together. But when fear takes over, investors sell everything not nailed down, and that has often included Bitcoin. In 2022, as inflation soared, Bitcoin didn't act as a hedge. It crashed right alongside the stock market. If your lifeboat sinks at the same time as the ship, it's not much of a lifeboat. While some recent data from late 2024 suggests this correlation may be weakening, the historical pattern is strong enough to cause serious concern. The third, and perhaps most existential threat, is regulatory risk. Bitcoin's future could be made or broken by government action. We've seen how sensitive the market is to this. When China cracked down on Bitcoin mining in 2021, the price plummeted. A coordinated hostile stance from the US and Europe could be devastating. Governments can restrict access through the banking system, impose crazy taxes, or even attempt outright bans. While a full ban is tough to enforce, they can certainly make it a pariah asset, crippling its adoption and price. Finally, there are its technological and practical limitations. The core Bitcoin network is secure, but it's also slow and inefficient for small, everyday payments. It can only handle a handful of transactions per second, a tiny fraction of what networks like Visa process. While Layer 2 solutions like the Lightning Network are designed to solve this, their adoption is still in its early stages and they bring their own complexities. And despite growing use, the narrative of it being a hedge is complicated by speculation. The price is driven not just by people seeking a store of value, but also by traders looking for a quick profit, which just adds to the volatility. We've just laid out the powerful arguments both for and against Bitcoin. It's a complex picture, but things are about to get even more interesting. Before we get into the new laws and technologies that are reshaping this entire debate, if you're finding this analysis valuable, take a second to hit that like button and subscribe. It helps us keep making content like this, and you won't want to miss what's coming next. The bull versus bear debate has been raging for years, but that whole conversation is being fundamentally changed right now by two massive forces: the legitimization of Bitcoin through new laws and financial products, and the maturation of its technology. First, let's talk about the laws and the arrival of spot Bitcoin ETFs. The approval of these ETFs in the US in early 2024 was a watershed moment. It was a formal invitation for Wall Street's massive pools of capital to enter the market. For the first time, any investor, from a retail saver with a 401k to a massive pension fund, could get exposure to Bitcoin through their regular regulated brokerage accounts. The impact has been staggering, with tens of billions of dollars in net inflows. This does a few things. It dramatically increases liquidity, which should help reduce volatility over time. And most importantly, it gives the asset a powerful stamp of legitimacy. The regulatory story doesn't stop there. In the US, there's a growing push for clear legislation. While no single comprehensive bill has become law, a major milestone was reached in July 2025 when the Guiding and Establishing National Innovation for US Stablecoins Genius Act was signed into law. This created a federal framework for stablecoins, requiring them to be backed by high-quality assets. Alongside this, other proposals like the Clarity Act, which passed the House, are working to draw a clearer line between crypto assets that are securities and those that are commodities, with Bitcoin firmly in the commodity camp. This regulatory movement is critical. It's creating clearer rules of the road, which is exactly what large institutions need to get involved at scale. Now, for the second game changer, technology. The biggest valid knock on Bitcoin has been its scalability. That criticism is quickly becoming outdated thanks to the Lightning Network. Lightning is a layer 2 protocol built on top of Bitcoin that enables near instant, nearly free transactions. This technology is seeing a surge in adoption. By mid-2025, major exchanges like Coinbase reported that a growing percentage of their Bitcoin withdrawals were moving onto Lightning. Some analyses even suggest the network's ecosystem has a potential reach of hundreds of millions of users through integrations with popular apps and wallets. This means Bitcoin is evolving. It's not just digital gold, a slow, heavy asset. It's becoming a true medium of exchange, a global payment network that can compete with Visa or PayPal, but without the middlemen. So, where do we land? Can Bitcoin survive the next financial crisis? Is it a safe haven or a time bomb? The most honest answer is this: it's both. And that's exactly what makes it so revolutionary. Bitcoin is, without a doubt, still a volatile and risky asset. It's not the stable, slow moving safe haven your grandfather would recognize. In a sharp, sudden liquidity crisis, a true risk off panic, history suggests Bitcoin could sell off hard alongside other assets as investors flee to cash. We saw this in March 2020 and have seen similar patterns in more recent turmoil. In that sense, it still has the properties of a time bomb for anyone unprepared for its volatility. However, the nature of the next crisis is what matters most. If the crisis isn't a short deflationary shock, but a long, grinding inflationary decay, the silent erosion of wealth we talked about at the beginning, then Bitcoin's core properties make it one of the most important assets of the 21st century. Its absolute scarcity is the direct antidote to infinite money printing. Its decentralized nature is a shield against the growing threat of financial censorship and control that could come with CBDCs. The narrative that it's just a speculative tech stock is being dismantled. Institutional adoption via exchange traded funds is creating a structural demand for the asset that never existed before. Regulatory clarity is reducing its existential risk, and the Lightning Network is giving it real world utility beyond just storing value. Here's the bottom line: the traditional financial system is trapped between a mountain of unpayable debt and the promise of endless money creation. In this scenario, there are two likely outcomes: a deflationary collapse, where the debt bubble bursts, followed by an inflationary fire hose of money printing to fix it, or an inflationary escape, where the value of that debt is wiped out by devaluing the currency, silently stealing the savings of billions. In either scenario, an asset with a fixed, unchangeable supply becomes phenomenally attractive. Bitcoin isn't a perfect safe haven in the traditional sense. It's something new. It is a volatile, high powered digital lifeboat designed not for calm seas, but for the unprecedented monetary hurricane on the horizon. It's a bet on the failure of the current financial architecture and the rise of a new, decentralized alternative. It may be a time bomb for the unprepared, but for those who understand the new rules of the game, it might just be the most important financial tool of our lifetime. That's my analysis, but this is one of the most important conversations in finance today, and I want to know what you think. Is Bitcoin the answer or a disaster waiting to happen? Drop your thoughts in the comments below. And if this gave you a new way to think about the financial future, make sure to like this video and subscribe for more deep dives you won't find anywhere else. Thanks for watching.